New read on oil inventories. That means how much oil we've got in the barrels of storage. Up 4.9 million barrels. That's more than expected. I want to bring in a real expert in this area, Stephen Schork. He's with the Schork Report. Stephen, it looks to me like the glut is growing here and overseas. Is that accurate?
That seems to be accurate, correct, Stuart. As far as today's weekly report goes, we have to bear in mind it's just 1 week, and certainly 4.9 million in a vacuum is a large build. But when we look across the seasonal averages, the seasonal norms at this point, 4.9 falls right in there. So I'm not going to get too excited. But certainly what we've seen now over the last couple of weeks, especially going back to that Sunni-Shia lovin', where they all sat around the oil derrick in Algiers and sang kumbaya that they were going to, maybe take about 700,000 barrels off. The market's been on a tear, but we've had numbers now that have come out from the IEA and the OPEC that said, you know what, we're still really producing. That glut's going to be around for quite some time now. Now, most of our viewers are stock market investors as opposed to oil futures investors. Yes. And when they look at this glut, they think, oh, goodness me. Is the price going to go down significantly? Because if it does, well, the stock market goes down significantly. They are tied. So what's your forecast for price, bearing in mind that you've just told us this glut ain't going away? Exactly. So from an economy standpoint, and this is the problem people really should take to heart. It's not an oil situation. It's an industrial commodity. And industrial commodities have been in a long-term bear market since 2014. And quite frankly, industrial commodities don't go into bear markets because of good economic times. So that is certainly the sword, as it were, hanging over this market's head right now. So going forward, certainly where we are now, low 50s coming into today, I think is pretty much the top of the range. Can't see it really going higher, especially going into the end of the year, because we are now in a weak demand scenario. And certainly in 2017, I'll say the same thing for 17 that I said for 16, that I said for 15. And that I said beginning in 14. Oil in the $50 to $55 range seems on the high end. Oil on the 45 to 40 range on the low end. So certainly I expect us to hold within that range through the next year.
Well, you're an honest man, and you're giving us an honest forecast, and the Dow Industrials are down 163. Stephen Schork, thanks for joining us, sir. Appreciate it. Good stuff.
Thank you, Stuart.